Truth is, I thought it mattered. I thought that
money
mattered. But does it bollocks? Not compared to how people matter.
Welcome, Mention and other fine folks, to the Sunday dispatch of the Black Letter, where we contemplate thoughts worth thinking. And the thoughts we're thinking about today happen to be on cryptocurrency and particularly Stellar. So we're going to have a look at this. I particularly like Stellar. XLM or Lumens is the coin for the Stellar Foundation. And I see it as not so much a competitor to XRP or Ripple, but more as a cousin, if you will. And we'll go through why I think that is and see if Stellar is something that I should continue to hold or not, or continue to invest in. So here we have the Stellar website, stellar.org, and Stellar Development Foundation, creating equitable access to the global financial system. The Stellar Development Foundation is a non-profit organization founded in 2014 to support the development and growth of the open source Stellar network. SDF and Stellar seek to unlock the world's economic potential by making money more fluid, markets more open, and people more empowered. The foundation helps maintain Stellar's code base, supports the technical and business communities around Stellar, and is a speaking partner to regulators and institutions. Stellar also was created by one of the guys that was originally involved with Ripple as well, one of the co-founders of Ripple, but also one of the co-founders of Mt. Gox. Now, Mt. Gox has a bad history, but as I understand it, the founder of Mt. Gox, who was also instrumental in Stellar, was not at Mt. Gox at the time when that whole thing blew up. And if you're not sure about Mt. Gox, that's where a whole bunch of Bitcoin were lost or allegedly stolen in the collapse of that particular exchange way back, I think probably 3, 4, maybe 5 years ago now. Okay, so here we have another article on Stellar. Stellar XLM Guide, Uniting Financial Institutions in One Network. One might say that if Bitcoin and XRP were to get married, Stellar would be the child. It possesses the great qualities of these two strikingly different cryptocurrencies. For example, it is permissionless and decentralized like Bitcoin. At the same time, moving value within the platform is fast, cheap, and energy efficient, just like XRP. The aim of the Stellar project is to be able to move all forms of money, whether that be dollar, yuan, Bitcoin, like email. It's quite a good long article. If you don't understand Stellar or want to have a sort of a good overview of it, then this is certainly an article to review. And I'll leave the descriptions, of course, I'll leave the links in the description below. So Stellar Lumens. Lumens are donated by the sticker symbol XLM. It's the native asset of the Stellar blockchain. And there's a reason why you need a certain lumen, or at least one lumen in your account, similar to XRP, although XRP, I think, requires 20 XRP per account. So for spam attack prevention, with a capacity of 1,000 transactions per second, transferring value within the Stellar network is quick and easy. But if sending payments was completely free, the Stellar blockchain could become filled with spam or malicious transactions that could overload the system. So each account is required to have a minimum balance of 1 lumen. In addition, sending transactions would induce a small fee of 0.00001 lumens. So that's fractions of a penny. The XLM digital currency facilitates multi-currency transactions by acting as a bridge layer between various currencies, very similar to XRP. Suppose Charlie in India wants to send 6,000 rupees to Jules in the US. He wants her to receive the money in US dollars. So Charlie inputs 6,000 Indian rupees in his wallet. He types Jules' payment address, indicates that she should receive the money in US dollars, and taps send. 5 seconds later, she has $84.16 in US in her wallet app. The transaction cost only 0.00001 of a lumen. And nice thing about the Stellar system, I think similarly to XRP, is that the Stellar system will always find the best prices efficiently. That's a good overview of Stellar. As I mentioned, I see it more as a sort of a cousin to Ripple. And as they mentioned, it has perhaps the benefits of both Bitcoin and Ethereum, although Stellar is struggling, as we'll see. Stellar price analysis, token supply cut in half. In a likely bid to increase the adoption of Stellar as a store of value, the Stellar Development Foundation axed 55% of the total token supply, as well as successfully campaigning for the removal of inflation on the network. So inflation means basically the amount of new coins being mined or minted or made each year. Stellar XLM is a payment protocol that aims to connect banks, payment systems, and people, so you can see it's very similar to Ripple. What I like about Stellar is that it's a non-profit, whereas Ripple is a for-profit. The project is analogous to Ripple in many ways, as I mentioned, and it was created by Jed McCaleb and Joyce Kim in 2014. Jed McCaleb was with Mt. Gox and Ripple previously. The SDF was created to promote global financial access, literacy, and inclusion by expanding worldwide access to low-cost financial services through the development and maintenance of technology and partnerships. I see Stellar as being more interested, I think, with poorer folks or poorer economies in the world where there's many unbanked people, and I think that's why their transaction fees are so low, why they're also perhaps part of developed as a non-profit, whereas Ripple, I think, is more focused in interbank transactions primarily, although I'm sure they will make it useful for just individuals as well to send and receive money in many different currencies or different ways. But I think XRP, Ripple, is more focused on the corporate or big banking interbank market, whereas Ripple, I think, whereas Lumens, I believe, is more interested in the unbanked and allowing for those unbanked people who unfortunately are in a lot of the developing world to have access to transactions and financial services that they can't get currently. Neither XRP nor XLM use proof of work or proof of stake, but instead use validators to confirm transactions on the network. Validators do not receive a block reward. Anyone in the XLM network can be a validator, so the user must decide which validators to trust. So this is a small weakness here, something to be aware of. The centralization of validators is currently a weakness in the system, as mentioned, because it's, as you see up here, there have been 125 public nodes and 70 validators active on the network over the past 2 days, which is not a lot. Most of those in the US and Germany. And so he says that downtime does happen. So what if a set of important nodes goes down and the network halts? Well, and that's what happened last year, about a year ago. The network stalled for 67 minutes due to an inability to reach consensus. That is a bit of a problem. Initially, the Genesis block minted 100 billion tokens, and now there are 50 billion. I believe they burnt 55 billion, I think leaving just 50 billion left, allegedly. A quick comparison between two similar networks, Ripple and Stellar, shows Ripple dominating market cap, daily transaction volume, total daily fees, while Stellar dominates daily transactions, daily active addresses, and GitHub commits on the main repo over the past year. And I mean, that's good. That means that things are moving. There's still a lot of work being done on it. That's just not as big, obviously, as you can see here. XLM Stellar is in the red and Ripple XRP is in the blue. So market cap is about 80% larger than Stellar's. Total daily transaction volume in US dollars is much higher, but that could also be because of the fees. As you can see here, the fees are much higher. However, the transactions per day, Stellar is doing more. They also have more daily active addresses and more GitHub commits. So, they're similar but different enough that I think there's room for both of them. But that's just my opinion. I could be wrong. Just ask my wife. Average transaction fees on the chain are much lower than most other chains, including XRP, the black line in the chart below. And so that's why, obviously, the fees would be lower as well. And I would argue that's a good thing, especially for folks in developing worlds, and the unbanked especially. And many times they're unbanked because they don't earn much money, so they don't have a need for a bank, or they don't live in areas where they are serviced by banks. The 30-day Kalichkin network value to estimated on-chain daily transactions ratio line in the chart below has fallen significantly since August 2018 and is currently 748. Historically, an NVT below 500 for the Stellar network has signified bull market conditions. So you can see here's the line. It's sort of slowly drifting lower. A clear downtrend in NVT suggests a coin is undervalued based on its economic activity and utility, which should be seen as a bullish price indicator, potentially. And then goes through into a lot of technical analysis, which I'm not that particularly concerned about, or other than in just a general overview, looking at the chart to see if I'm getting in at a relatively undervalued price or not, or low price. But otherwise, I'm more of a holder, so I don't particularly care about technical analysis to a large degree. Transactions per day have increased dramatically over the past 3 months, reaching a new all-time high, which is good news too. It means that there's activity on the network. Technicals for the XLM USD pair reveal bullish trend metrics for the first time in nearly 2 years. So more good news. But in all fairness, let's take a look at some bad news. Well, let's have some good news first, and then we'll get to the bad news. Stellar has outperformed XRP since March coronavirus crash. XRP has had a hard time recovering from the coronavirus crash of mid-March, whereas XLM seems to have fully recovered. You can see here, during the crash, XRP dipped to as low as 10 cents, this is probably US dollars, from steady levels around 25 cents. At the time of this writing, XRP is valued at around 19 cents, indicating that it has recovered by a factor of 76% in the recovery of XLM or Stellar since the coronavirus crash. Doing a similar analysis of XLM, we find that during the coronavirus crash, the digital asset dropped from a value of 6 cents to around 2.5 cents. So at the time of writing, this XLM US dollar is trading at a value of about 7 cents. This indicates that XLM has more than recovered from the coronavirus crash by a factor of 121%. Staking of XLM is made easier by Binance. So the latter exchange, Binance, they're talking about, facilitates an estimated annual yield of between 2 to 4% in XLM from straight staking the digital asset. Now that's quite low, which probably would indicate that XLM is not as valued in staking as some of the other coins, but still, there's an opportunity to make some passive income if you're willing to understand the risks involved with that, right? Stellar XLM Protocol 13 upgrade goes live successfully, and this is a new protocol development that allows for certain benefits. As you'll see, the team says Protocol 13 upgrade brings several significant improvements to the Stellar network, including fees bump, first-class multiplexed accounts, and more. Protocol 13 upgrade will bring 3 more exciting features, including fee bumps, fine-grained control of asset authorization, first-class multiplexed accounts, and more. New fee bump feature makes it possible for Stellar-powered applications to cover user fees, allow users to increase fees for pre-signed transactions while also making it easier for validators to increase fees. So, I mean, that's not necessarily a bad thing, but it's not necessarily a good thing either. I mean, if part of the process is trying to help the unbanked as a non-profit, then obviously fees are going to become an important aspect of that, because a lot of folks with small means cannot afford large fees, so we'll have to keep an eye on that. XLM price prediction: could 2020 be the year of the coin's stellar surge? So here we get a little bit of mixed news. There are already a few big names associated with this network, including IBM, Deloitte, Stripe, Tempo, Satoshi Pay, Saldo, and Wirex. Even Binance, the world's largest crypto exchange, started providing support for the Stellar crypto. So it has some good partners for sure. The project's main intention is to be an open financial system that gives people of all income levels access to low-cost financial services, as mentioned before. Here you have some of the features of the Stellar blockchain. It's fast, like Ripple. It allows those to utilize this network to manage micropayments, reduce the transaction and remittance costs, and increase the reach through mobile branches, which is handy for the unbanked. All you need is a phone, really, but that's a smartphone, but that's much like most coins. It can be used for micropayments, process remittances without the issues of forex exchange, and make payments almost instantly. It can handle 1,000 transactions per second at less than a penny each. Moreover, the coin is tradable anywhere in the world in less than 5 seconds, which makes it a great fit for cross-border transactions. But here's the chart. You can see it's really almost at all-time lows. Well, it can fall a lot lower too, but it's obviously when it was up here, I think at almost $1. And now it's at about 9 cents. It's a big difference, right? Okay, then we'll get to the price analysis. So according to CoinSwitch, Stellar has the potential to grow out to be one of the best performing cryptocurrencies in the next 5 years. Their analysts believe XLM will likely touch the $1 mark in 2025. That's the good news. Now we start getting to the bad news. Trading Beasts also provides its own prognosis that is based on technical analysis. Its XLM price prediction suggests that the coin will trade around 7 cents by the end of this year and will remain at the same level through 2021. By 2023, Lumen is expected to rise to an average of 10 cents. And it gets worse from here. Cryptoground.com, based on an internal deep learning algorithm, the website states that the coin will likely reach 10 cents in 1 year, gaining almost 82%. The growth is expected to continue, with XLM hitting 74 cents valuation in 5 years. Okay, so these three up here are relatively good news, with CoinSwitch suggesting the highest mark. As you can see here, this is the XLM price prediction chart for them. However, not everyone has an optimistic XLM forecast. Wallet Investor refers to Lumen as a bad, high-risk 1-year investment option. Based on their technical analysis, the coin is expected to drop in value significantly, with its price plummeting as low as half a cent by the end of 2020. The website also prognoses the coin to start 2025 at a disappointing rate of 1/10 of a penny. So there you go. So you've got to pick your poison, folks. It's either going to go to the moon or reach for the moon and fall into the ditch, right? We'll have to see. London's micropayments fintech Satoshi Pay acquires $550,000 investment in XLM cryptocurrency from Stellar Development Foundation. So here we go. Satoshi Pay, which is a London-based fintech firm that aims to provide fast and affordable payment solutions, has teamed up with San Francisco headquartered Stellar Development Foundation. And Satoshi Pay has received almost just over $500,000 from SDF's enterprise fund. So here we are buying, I guess, that's pay to play in these different fintech firms potentially. I mean, that's a negative reading of that news. And the positive is that they have another partner on board, right? So we'll have to see. We'll have to see. I'm a really big believer in Stellar, especially their non-profit aspect. The fact that they, from what I understand, want to try and help the unbanked and those in the developing world access more financial opportunities, which I think is terrific. But will they succeed? That remains to be seen. You don't hear a lot about them as compared to Ripple. And it might be that Ripple ends up taking their lunch and moves into that market as well. But we'll see. I'm willing to put a little bit of money into Stellar because I believe in it. And I think there is the opportunity. Another article here, UNICEF. So UNICEF, which is the United Nations International Children's Education Fund. The UNICEF cryptocurrency fund announces its largest investment of startups in developing and emerging economies. 8 technology companies in developing and emerging economies will receive investment from the UNICEF cryptocurrency fund to solve local and global challenges. So the reason I bring this up is that I think it's just terrific that big organizations are starting to see the potential of blockchain and cryptocurrencies in helping to transfer value, especially to the developing world, where of course cost and fees in transactions is very important. The transfer of these funds to 8 companies in 7 countries around the world took less than 20 minutes and cost us less than $20. And so these are the different groups that received it and what they're sort of doing. So a lot of great projects here. I think crypto is going to be huge. It's probably going to become huge in the developing world first and then really take off in the developed world as well. Lastly, I have this Seeking Alpha article, which I thought was great. Something interesting, covered calls, option strategy to generate yield with Ethereum. So he explains how to do covered call options, etc., etc. Now, I'll leave this article to you to read if you're interested in that. Options are risky. However, covered calls, I would argue, are the least risky of the options out there, because basically you hold the asset and then you earn income by writing options against that asset, and while you're waiting you take in a small premium. However, that your asset, in this case Ethereum, can be called away from you, as we'll see here. So the requirements is that you have to hold the asset, in this case the Ethereum, then you write or sell Ethereum calls against that asset. And here's an example he's using is Ethereum at the current price of 234. And so this example, he says that you sell the Ethereum with a strike price of 280 for an expiration of 31st of July in 2020, and you sold it on Deribit. So here's how it works. You hold 100 Ethereum at $234, meaning you have assets valued at $23,400. You sell 100 call option contracts with expiry date on the 31st of July 2020 and a strike price at $280. Taking the bid price, you earn a premium of $932 up front, which is not bad on $23,000 worth of asset, right? You hold your Ethereum and your calls until expiry. At the expiry date, the 31st of July 2020, you keep the premium earned if Ether does not finish above 280 at the expiry date. If Ether goes higher than 280 plus the premium paid per call option, in this example $9.32, so a price higher than $289.32, you will lose the opportunity to make more money by having not to sell call options as ETH price went up a lot. And then he speaks to you about the 4 possible options. So the 4 possible options are, if Ether is at $289 roughly, let's say, so if Ether is more than the strike price plus the amount that you got for each call option, which is $9.32, so you add those two numbers, you get $289.32. So if on the 31st of July, Ether is trading at $290, then you have to sell your Ether at $280 to whoever is the other party on that particular option, right? So you get, in essence, $289.32 per Ether if you have enough contracts, right? So you earned quite a bit because you hold Ether at 234 and you sold it for 289, which means you made $55, right? So you did well. However, if at the end of this contract, on the 31st of July, Ether is at, say, $230, then the call expires useless and you get to keep the $9.32 per Ether, right? So that means that you've lost a little bit of money on your current holding because you bought at 234, Ether's only worth 230, but you made $9, so you're still ahead, right? I don't know if that explains it well, but basically, in my opinion, you're making money generally either way unless the floor comes out from under Ether. So for example, if Ether is at $200, then you've only made $9.32 per option, then you've lost $34 on what you paid for Ether, but you made $9 on the option, right? So it depends how you look at it. I would personally, I only would do covered call writing if it's on an asset I wanted to own long term. Anyway, so there's an option there if you're interested in options. Not trying to be punny. Have a read of that. It's interesting. And there are risks involved. You need to understand all of that, but there you have it. Okay, folks, time for the Magic 8 Ball. Let's see the question we have for the Magic 8 Ball. So I say, let's go big or go home, because we were talking earlier that was a Coin Wallet, or somebody had suggested Coinbase, maybe. No, not Coinbase. Somebody had recommended, an analyst had suggested that XLM Stellar will be $1 by 2025. I think that's perhaps unlikely. I think, if anything, Stellar could be worth 100 times from here, if not 1,000 times. But let's say 100 times by mid-decade. So I see XLM Stellar being worth about $10 per Stellar by 2025. So let's see if the Magic 8 Ball agrees with me. Will XLM be worth $10 by 2025, Magic 8 Ball? Uh-oh, it won't be. Well, there you go, folks. So Stellar is definitely risky. Mind you, so is all cryptocurrencies. So I wouldn't bet the house on it, and I'm certainly not doing that anyway. And of course, you need to do your own due diligence. None of this is advice, just what I'm doing, just thoughts I'm thinking. Hope you enjoyed it. Thanks so much for joining me again. I appreciate you guys. I hope you're doing well. Stay healthy, kind, and remember, dom spiro, spero.